A personal bank loan can be a good way to get the funding for anything from a car to new professional or sporting equipment. However, it can be a risk, and as with any risk, you want to learn as much as you can before you dive right in. Read on then, and arm yourself with the knowledge that will help you make an informed decision. 1. The bank and economic troubles. Due to the somewhat sluggish economy, many financial institutions are becoming rather risk-averse. Expect to face strict standards when applying for your loan. Some very important factors they'll look at will be credit scores and salary, so do as much as you can to make yourself a better candidate. Credit advice is approached below. 2. Options. Generally speaking, there are two types of personal bank loans. Secured, which will require you to put up an asset, such as a home or car, for collateral. In exchange, you get a lower interest rate and potentially a better chance at being approved. Unsecured, which can be harder to get approved for, particularly if your credit score is less than perfect. Interest rates are higher, but on the other hand, there is no risk of losing your home or car if you cannot pay. Though a secured loan can be very tempting, it is important to take a step back and consider whether or not it is worth the risk. You will also want to look into other options that your bank might have, such as auto loans, that might be more favorable for your purposes. 3. Your local bank or credit union can help. Being an account holding member in good standing at your local financial institution can make it far easier to be approved. They will often look at the account balance and age when you apply. Generally speaking, the higher the better. It is a good idea to make this your first stop in the search. Keep in mind also that credit unions may be more willing to take risks than larger institutions, and as not-for-profit establishments, they can offer lower interest rates. 4. Consider your credit score. When you apply for your personal loan, nearly everything from the interest rate to final approval is determined from your credit score. Search the web for sites that let you make a soft inquiry into your rating. This pings the major credit bureaus without hurting your score. Some will give you a fairly detailed report on all major factors, including open accounts, late payments, collections, and other records. This knowledge can help you take the right actions. In general, though, it is good to make at least the minimum payments on all accounts on time, every time. You may also consider getting a credit card to help build your rating, but be careful with your spending. At the end of the day, having a cosigner can help you get over any hurdles. This is a big risk for the cosigner, so before you look for somebody, make sure that you will be able to pay.